trust partnerships, superannuation funds, and individuals. Also with us today, we have Tanya Kirkland. Tanya is a chartered accountant and registered company auditor and has 22 years experience in the audits of not-for-profit organisations. Tanya is an audit partner at WCA Chartered Accountants and specialises in the application of accounting standards and company reporting requirements. So I'll ask them to unmute themselves, and I'll hand that over to Stephen and Tanya now to take us through the presentation. You guys are still on mute. Oh, do we have to unmute you? Sorry, new technology. We've now unmuted. You okay? Okay.
Oh, we're live. Yes.
Here we go. All right. So I'll hand over to you, and I'll flick onto the first screen.
Yeah. Look, thanks, Michael. Appreciate the opportunity that you've given us to have a chat about all these things. As you've already said, there's quite a number of things that are available, and it's not really possible in the space of 1 hour to go through each and every one in the detail that we would like to. But we will try and keep as much time as possible for some questions towards the end, and hopefully we can help out, all the businesses that are participating, and hopefully give you something that you can walk away with. The main thing, I guess, we want to point out is that, firstly, we are in a position where we can only give general advice. We don't know the personal situations for each and every business involved. So we'll have our standard disclaimer on that front that this is only general advice. And probably just to keep in the back of your mind for everyone that a lot of the specifics, especially when it comes to the JobKeeper package and some of the New South Wales state government packages, a lot of the specifics are actually not yet released. So what I'd encourage people to do is keep in touch with your accountants, keep in touch with your auditors, keep in touch with your business advisors, and use them as a valuable resource just to keep yourselves abreast of how all these stimulus packages can potentially apply to your business. Might hand over to Tanya, and we'll go through the first slide on the federal packages.
Okay. Michael, did you want to just skip over to the first slide on the federal stimulus package? Okay, very good. Okay, we'll just run through each of these points, and then once we get to the end of the federal stimulus packages, we will see if any questions have been submitted and run through those at that point in time. So just the first one there is in regards to ATO tax deferrals. Now, the ATO have indicated at this point in time that they will be flexible about lodgements and payments for businesses. We are encouraging most of our clients to get their lodgements in on time if they can. The problem with all these deferrals is, even though they are going to be flexible with the timing, a lot of the stimulus packages do come back to information from those lodgements. So it is important that the lodgements are done to enable access to some of these stimulus packages. With the payment terms, if you do your lodgements on time, just make sure that you are talking to the ATO and you are keeping in touch and setting up payment plans and payment terms to make sure that you aren't penalised if you aren't paying it on time. Okay, the second one there is just in regards to the apprentice wage subsidies. Now, there was something released to help with cash flows in regards to businesses being able to keep their apprentices and their trainees employed. So businesses are able to apply for a wage subsidy of 50% of their apprentice or trainees' wages for the period from 1 January 2020 to 30 September 2020. Now, to be eligible for this, the business needs to employ fewer than 20 people, and they need to, they can be using a group training organisation for that to happen. Now, this wage subsidy of up to 50% of the wage could be worth up to $7,000 per quarter for the 3 quarters for eligible employers. Now, just keep in mind with the JobKeeper, which Steve will go through in a bit more detail later, once JobKeeper does kick in at 30 March, it may be more beneficial for a business to actually not use this anymore. They may only use the apprentice subsidy for the first 3 months up to the 31st of March because you can't access both the apprentice subsidy and the JobKeeper. and it may prove more beneficial cash flow wise to have the apprentice on JobKeeper with other employees. So there is that one out there with apprentices. If you do employ fewer than 20 and you do have apprentices or trainees that you have on your books. All right.
So in relation to the next point on that slide, the instant asset write-off, there's actually two components to the business investment stimulus measures that have been announced. The first component relates to the period up until 30th of June 2020, where capital acquisitions, plant and equipment asset purchases up to $150,000, you can get an immediate tax deduction for. So that's going to be great for all small businesses with a turnover up to 500 million. So it's actually expanded from the normal limits of just 50 million. Now, there's an immediate deduction, as I said, up to 150,000 for new and second-hand assets acquired between now and 30th of June. Now, after 30th of June, normally the instant asset write-off would revert back to $1,000 for small businesses. However, the part of this measure is also an additional concession where after 1 July 2020, an additional 50% immediate deduction on new assets only. Second-hand assets aren't eligible for the secondary payment that applies after 1 July, where there is an immediate depreciation deduction of 50% of the cost of the asset on acquisition or an installation, and then the existing depreciation rules would apply to the balance of that asset's cost. And again, this measure applies equally to businesses with an aggregated turnover below 500 million, sorry. So it's there will be businesses out there who will actually definitely get some benefits from this. One of the things that we're seeing is this is going to be great for the primary producers around the region, which, coming off the back of drought and bushfires, they've actually hit some nice weather, and we expect that there might be some primary producers looking to take advantage of this measure. Skipping on to the next one is about the superannuation withdrawals and the ability to potentially access up to $10,000 of superannuation between 20th of April and 30th of June 2020, and then a further $10,000 from 1 July through until 24th of September. Now, the $10,000, it's up to $10,000 of your superannuation that can be accessed. The $10,000 that is accessed is tax-free income. So normally, early access to super would require you to pay tax on the amount that's accessed. This payment is actually a tax-free payment. To be eligible to get access to the early release of super, you must meet a few conditions. You have to either be unemployed, or you have to be eligible for at least one of the following, which is either the job seeker payment, the youth allowance for job seekers, parenting payment, a special benefit, or the farm household allowance. Now, in addition to those requirements, you will also need to be, after 1 January 2020, you need to have been either made redundant, have your working hours reduced by 20% or more, or you were a sole trader and your business was either suspended or there was a reduction in turnover of 20% or more. So again, the rules slightly different to the JobKeeper payment as far as the turnover requirements go. The access to super is a little bit more generous in that a 20% reduction in working hours for employees or turnover for the self-employed will get you into this system where you can potentially access your super. Accessing the super, again, it's only limited to citizens and permanent residents of Australia. And further, the process is all governed through MyGov, so there will be a formal process to go through. We understand that is expected to open for applications from the 20th of April, along with the JobKeeper payment. If people intend on applying for this concession, I'd suggest There's going to be a lot of applications. There's going to be a lot of traffic with the ATO website. We are unfortunately expecting that there might be some technical issues on the ATO end and on the MyGov end. So you might need to be patient and spend a bit of time to try and get through specifically to get into this payment. Yeah.
Okay, the next two that I'll run through, the first one is job seeker payments. Now, I'm not going to spend a lot of time on this. I think job seeker payments are more out there for those employees or individuals that aren't eligible to get JobKeeper through their employer or who have been terminated from their job as a result of COVID. So I think as far as job seeker payments go, they have reduced the waiting time to be eligible for that payment. They have also reduced what your increased the limits that your partner is able to earn. So with the job seeker, it's more for the individuals than the businesses. It's more for those individuals that aren't eligible for JobKeeper. So just important to note that they can't be getting JobKeeper and job seeker. So that I won't go into any more detail with that one. In regards to the loan scheme, so this has been put out there for small and medium-sized businesses to help with their cash flow. Now, for any eligible lenders, they will be able to access loans of up to $250,000 per borrower. The loans will be for up to 3 years with an initial 6-month repayment holiday, and it will be in the form of unsecured finance. So this is basically put out there with the government providing a guarantee on these unsecured loans. So it is a cash flow measure that's been put out there for the businesses to help them get through this period of time with these borrowings of up to $250,000. Okay.
Now, the last two on this slide are probably the two major stimulus measures that the federal government's actually put out, which is the boosting cash flow for employers in relation to the pay-as-you-go withholding and the JobKeeper payment. And I dare say this is probably the part that's going to attract the most interest for many of the participants here today. And it's certainly where, in many cases, a lot of the value and the cash flow as support is actually going to come through. So we'll probably spend a little bit of time on these, and I expect there's going to be a lot of questions, which is great. Happy to help out as best we can. The first one, boosting the cash flow for employers. What this one is about is for all employers who are small business and not-for-profit organisations, a potential to receive between $20,000 and $100,000 in cash flow boosts following the lodgement of their activity statements for March through until 30 September. Importantly, you are required to lodge your activity statements. So as Tanya mentioned earlier, to actually trigger these amounts, the activity statements need to be lodged. Whether they're paid or not does not affect your eligibility for the cash flow boost. Importantly, the way the cash flow boost is designed to work is it's a concession that relates to the pay-as-you-go withholding, so the tax deducted from employees' payments. Also applies to any voluntary payments that you may have deducted tax from contractors and so forth as well, includes those amounts. The amount is capped at $100,000 and the amount that's received in the first period, which is from March through until June, that determines the amount that will be received, and that amount's capped at $50,000, and that determines how much will be received in the September period. Minimum amount is $20,000. Importantly, it's not enough to be just registered for pay-as-you-go withholding. You actually need to be an active employer, which essentially means you need to have reported wages at W1 on your activity statement. If you don't have wages at W1, you're not eligible, as we understand it. It doesn't matter whether or not there is any withholding done. So if you have $1,000 of wages for the quarter with zero withholding, that's okay. You are eligible for the full $20,000, which is the minimum amount that will be payable on this. The amount of the credit, it'll be automatically determined by the ATO. from an employer's perspective, nothing is required other than lodging your activity statements. The credit for March will be worked out a little bit uniquely for those who are monthly withholding reporters, whereas the month of March will be tripled, subject to the cap of 50,000 over the period of March through until June. And that amount will be given as a credit to your activity statement account with the ATO. So it won't be paid in cash. There'll be a credit to the activity statement account, which will be applied against that activity statement's obligations, so which will include your GST obligations. So importantly, you may actually have a BAS liability that is significantly more than the amount that will actually be required to be paid as a result of this cash flow boost. What we would encourage people to do is organise your BAS statements as per normal. It's important that you lodge the documentation as per normal. There's no change there. The only thing that will change is how much is obligated to be paid. In the event that a business has an existing ATO debt, by contacting the ATO, they will actually release a refund of the cash flow boost rather than applying it against GST debts, should that be something that businesses wish to do. But it will require you to make contact with the ATO. Now, I won't go through all the very specifics on how this payment will work, but as I said, it runs from the period of effectively 1st of March through until 30 September, and the amount of wages that's reported in March and the June quarter will ultimately determine how much of that cash flow boost you'll receive in July and September. Again, these amounts will be paid automatically by the ATO, and there is no registration process required to get into this system. Moving on to the last one on that first slide, which is the JobKeeper payment. And as we've noted there, it's the largest and probably the most important measure for many employees, or many employers. The difficulty we seem to be having is that there is a number of questions still to be answered. The rules have been released, but the ATO in the administration of the program are yet to release a lot more detail about the eligibility based on turnover tests and just clarifying a lot of the questions that still remain. Registrations for the JobKeeper payment do open on Monday. For those people who wish to claim for employees, you can jump in on Monday and you can start the process. If you want to be paid for the month of April, you need to make sure that you've registered by the end of April, paid your employees any top-up payments that they're eligible for by the 30th of April, and also confirmed the number of employees and the employees that are eligible with the ATO by, I believe it's the 4th of May. So there is some things that's going to be required to be done. The way you report payments to employees, including the top-up payments, each software is going to be slightly different, but it's important for those using single touch payroll. Have a look at the websites of your software providers, get the information from them, because there is quite specific allowance codes that need to be used for single touch payroll to enable the data matching that the ATO need to do on their end to determine that people who are eligible will get paid. If you do use inconsistent information, codes and the like, importantly, the payments that you may be eligible to receive will either be reduced or potentially delayed. So it's important, get those codes right, get in touch with your payroll providers, especially everyone who's using single touch payroll, and just make sure you've got things set up and working correct. And I'd encourage people to probably start that process now. You can create the allowance codes and you can get organised. There's a mountain of information available on this on the ATO website. The main requirement here is the turnover test, and that will ultimately determine whether or not an employer is eligible. The turnover test requires that there is a decline of 30% for small business or 15% for charities registered with the ACNC. You've got to meet that turnover test, which includes a projected turnover test. The turnover test will apply to the month of March, potentially, not the quarter of March, but just the month of March. And then you can look at the months of April, May, June, or potentially the June quarter, and you can estimate whether or not you will actually meet the required decline in turnover to be eligible for the JobKeeper payment. If you've got questions about whether or not you're eligible for the JobKeeper payment, I strongly encourage people, get in touch with your advisors, get in touch with your accountants, run through the fine print. We're all trying to get our heads around it. At this stage, the ATO still has a lot of questions to provide answers to in relation to the turnover scheme. But for the most part, we are in a position where we can advise on most clients how these rules will apply to each and everyone's business. Assuming you meet the turnover test, you then need to look at what your eligible employees, who they may be. You have to offer the JobKeeper payment to all employees, and that will then determine, well, as part of that, the employee gets the ability to nominate themselves to you. It is not something you can pick and choose. You have to offer it to all employees, and then we look at the eligibility. Now, to be eligible, there's a few key requirements. Firstly, the employee must be over 16 years of age on the 1st of March 2020. They need to be either a full-time employee or a permanent part-time employee. The other alternative is what we refer to as a long-term casual. Now, to be a long-term casual employee, the employee must have been employed for 12 months or more in a casual capacity as at the 1st of March. There is, for people who have bought an existing business and the employees from the previous business have moved across to the new business, there is a rollover period for that, so that the employees aren't disadvantaged, so long as between the two enterprises they've been a casual employee for the total period of 12 months, they'll still meet the definition of being a long-term employee. Again, there's a notification process. The registration process will start on Monday. We're yet to see exactly how that will work, but no doubt there's going to be a significant number of questions around that once that program gets opened up to us. The main thing is you've got to nominate, as we understand it, you've got to nominate all the employees and confirm the employees you will be claiming for. You have to make sure that the employees get paid their $1,500 minimum before tax for each fortnight. For the first JobKeeper fortnight, which ended on the 12th of April, you have until the end of April to catch up any payments in respect of that fortnight, and also in respect of the fortnight ending the 26th of April. If you don't get the payment done by 30th of April to your employees, and it's got to be reported through the single touch payroll system as well, at this stage it looks like you will be ineligible for that month for that employee. So that's a very brief rundown on the JobKeeper payment. Michael, maybe it's probably a good time just to open it up and we can try and at least address some questions that might have come through, at least on the federal measures that are there at the moment.
Sure. We have had a series of questions come through. Just a reminder to the audience, if you would like to submit a question through the chat function on the navigation bar, please just send through the messages there and we will get to them at the end of each slide. So jumping into them for this section, the first one is regarding sole traders. What is the 20% reduction based on? Comparative income for the same period like year on year, or comparative to last month, last 3 months? What is the measure?
Yeah, so I'm assuming this is in relation to the superannuation withdrawal. It is a 20% reduction, and I believe it is on a comparable period to the previous year. The hours is very much, as far as we understand it, the 20% turnover in relation to a self-employed, you have to look at the previous financial year, as far as we understand it. The hours, again, this is one of those ones that we're still waiting on some information from the ATO on. We're hoping, or we're expecting that from an hourly test for an employee, a loss of 20% for at least full-time and part-time employees, it'll be a 20% reduction in hours from more than likely their most recent month of employment. Turnover test, I believe they will be looking at the past financial year, a comparative period for the previous financial year.
Okay, thank you. Next one, I need to get a new vehicle, but it will be second hand. Am I better off drawing down on my super and getting it before 30th of June? Or is there a loan I can go for? Was also impacted by bushfires. So they'd be any kind of bushfire or COVID funding they'd be open to.
Look, assuming it's a business vehicle, look, again, I probably can't commentate on the ability to access super. That's financial advice, and that needs to be tailored specifically to people's individual circumstances. So accessing the super to pay for the vehicle, I'll leave to the one side, but certainly if it is a second-hand vehicle, the best tax result will come for a business by doing that prior to 30 June, because second-hand vehicles are included in the instant asset write-off up until 30 June. After 1 July, it's only new assets that will count for the accelerated depreciation rules. Again, depends on the tax position. If there's not much tax profit in the current financial year as a result of the coronavirus implications, it actually may not be beneficial. But if there's a need there to do a vehicle, look, it's probably, as a second-hand vehicle, it'd be the tax benefit more than likely is going to be better doing it before 30 June rather than after.
Okay, thank you. We have a small tourism business operating for 2 years. We have not yet been required to register for GST, but we were looking at making that required amount this year. We were significantly affected by bushfires and now COVID-19. I think to be eligible for new COVID-19 stimulus payment, we need to earn 75,000. We would have made that amount if we were not affected. Will we be eligible? So is any provision being provided, I guess, for projected earnings if people hadn't been qualified before?
Look, there's no requirement, certainly in relation to the JobKeeper payment. The fact that you're not registered for GST is not necessarily a problem. If the business has been operating for some time, so long as there's been income reported in the income tax returns and they've been done before 12th of March 2020, you should be okay. You should meet the requirements, regardless of the turnover level. If the tax returns, for instance, for the 19 financial year have not been lodged by 12th of March, there is scope for the ATO to extend that period of time. However, my encouragement would be, if you haven't lodged your 2019 tax return and you are in that position, act quickly, get the tax return sorted, get it lodged with the ATO, and at least have that confirmation that you have been in business as part of that tax return. And we would expect that that would be enough to make you eligible, regardless of the turnover level. You will still need to meet the 30% reduction, but certainly from a eligibility perspective, so long as there's been income reported in a tax return, you should be able to tick those boxes.
Excellent, thank you. Next question. I have a guide as a subcontractor via her ABN that I use 1 to 2 days a week. Can I apply for Job Seeker? I assume they probably meant Job Keeper for her.
Contractors, generally speaking, no, because it's only eligible for employees. So if there is a requirement to withhold, or if there is a voluntary arrangement to withhold tax from the contractor's payments, then certainly from the cash flow boost with regards to pay-as-you-go withholding, there is a concession that's going to be available there. But as a contractor, no, it's only eligible for employees and 1 eligible business participant in the case of a sole trader. So contractors would be out, yes.
Okay, thank you. Okay. Family businesses have not had to register for single touch payroll as yet. Will they still be able to participate in the JobKeeper program?
Yes. So it will be a slightly more manual process, and I'd probably encourage all those people to be involved and talk to their accountants. All businesses need to be on that system from 1 July anyway, even those with related party, which I guess is where this question is coming from. Related party employees, there's been an exemption to date, but no, single touch payroll, ideally you would be in that system. You do need to be in it from 1 July, so you need to probably get started and get that organised, but it doesn't preclude you from being eligible for the JobKeeper payment.
Okay. This next one's been put forward more as a scenario than a question, but I'll see if you've got any advice for them. We're a small not-for-profit festival and all our income for the year comes in September through to January each year. We have no income February to August. We are very concerned that our festival will be cancelled this year and we will have no 2020 income. We have 3 employees. So I guess, do you have any advice for people in that situation?
That's going to be a very difficult one. Assuming that they cannot meet the turnover test in the month of April or April, May, June, or potentially the June quarter, they are likely to be one of the ones that may well fall through the cracks. It might be that they meet the eligibility requirements in the September quarter, and at least they can get the payment for that last quarter. If the turnover normally comes in September through to January, it might be that with what doesn't come in September, maybe there's the opportunity to get through on the turnover test in the September quarter. They may not get the full 6 months of JobKeeper payments, but potentially they can at least still get the 3 months for that September quarter. But again, that's certainly one of those cases. We are hoping that the ATO will provide some clarification around that. At this stage, there's very little available for those sorts of scenarios. But I'd encourage them to keep in touch with your accountants, keep in touch with your advisors, and let them know that that's your predicament, and hopefully we can get to a point where there might be something available for them.
Excellent. Another one regarding JobKeeper. What if your March 20 period was not affected, but from April onwards, zero income? Also, do we have to register again on Monday?
Yeah, look, so at this stage, as far as the registration is concerned, the only thing people have been able to do at this stage is register your interest. It's not actually a registration process that people have gone through to date. The actual registration's only open on Monday. So yes, definitely need to register from Monday. In relation to the turnover test, you cannot use the March quarter as to meet your turnover test. You can only use the month of March. So if you do not meet the test for the month of March, but you're confident you're going to meet it for either the month of April or the April to June quarter, then you can apply, you can get the payments effective from the 30th of March, and yep, you're eligible from April if you're going to meet those turnover requirements in April, May and June.
Okay. Is there any assistance available for new businesses that have been open for less than 12 months?
For new businesses, it's not as good, I'll be honest. It's not as good. For the permanent employees, permanent and part-time employees certainly are eligible for the JobKeeper payment. Only casual employees need to have met the 12-month employment test. Now, if it's a new business that started from scratch, you are going to be in a position where you can only get the benefits for any permanent part-time employees, not casuals. If you've taken over someone else's business and you've done a purchase arrangement, the time that your casuals were employed with that previous business does count towards that 12-month test. So Normally that information would be made available as part of the business purchase process. You might need to go back to the lawyers or accountants who handled that transition, try and see what information you can get from them, or potentially even getting back in touch with the business owner who previously held the business and see what information they may be able to provide. So there is a transition for businesses to change hands, but new businesses starting out, the JobKeeper payment is only going to apply in respect of permanent employees. The turnover test, again, that's another one because you don't have 12 months data. 12 months ago, you don't know what your turnover was. It's going to be one of those ones that require you to get the discretion of the commissioner. So there is the potential to do that, but you've got to be able to show that your impact has been there and you're going to feel the impact of 30% or more. For someone in a restaurant type situation where the restaurant's been forced to fully close, that should be relatively straightforward. For those that are doing takeaways and things like that, you might actually have to look at maybe the September quarter, the December 2019 quarters, and see how your March and June quarters stack up against those as part of your process to meet the turnover test. But it'll be a manual process, I guess, through the ATO.
Okay. What happens if the new business vehicle costs over $33,000? Is there a limit for the instant asset write-off?
There is, but the limit is actually $150,000, and that's the cost of the asset. So it's excluding GST as well. So on an inclusive GST basis, it's effectively a $165,000 asset you can acquire, $150,000 net of GST, and that's an immediate write-off up until 30th of June 2020. After 30 June, again, we go back to just a slightly accelerated depreciation rule. But for the immediate write-off, the 30,000, don't worry about that anymore. It's 150,000 effective from, I'll have to confirm the date, but early March. I might have to, I can't find the date just off the top of my head, but I think it was the 1st of March.
Just conscious of time, need to keep plugging forward. We've lodged our BAS return, GST plus PAYG, for the quarter ended 31 March with an amount due to the ATO of less than 10,000. Are we okay to not pay this amount as the ATO will automatically apply the 10K and refund the difference?
Yes. So in that case, there's nothing to pay. The 10 grand cash flow boost will take care of the BAS liability there. Any amount, so the $10,000 less what your GST obligation is, will be the amount that's refunded to you. So if we had, for instance, 3,000 of GST liability, 3,000 of pay-as-you-go withholding, $6,000 BAS liability, the refund would be the 10 grand cash flow boost less the $3,000 of GST liability. You would expect a $7,000 refund from the ATO. The ATO have said that they won't apply that debt against other ATO debts, but importantly for businesses, it may actually be applied against other federal government agencies' debts, so such as child support and things like that. So other government agencies may take the refund if there's some existing debts there, but apart from that, you'd expect in that scenario the $7,000 refund to come back on after the 28th of April.
Okay. Sorry, conscious of time again. I'll go through the questions we have at the moment, but any additional ones we get through at this point, we might to get back to at the end. I work under an ABN and put down my income as part of a trust return. I pay my assessed PAYG amount every quarter, which includes a trust distribution. Do I have to be GST registered to claim the JobKeeper payment under my ABN?
Yeah. Simple answer is no, you don't require a GST registration to be eligible for JobKeeper. You need an ABN, absolutely, and you need to have the employees or what sounds like in this case, an eligible business participant. So a sole trader is trading through a trust, not as an employee, but effectively as a sole trader through a trust. you make a claim as an eligible business participant rather than an employee. Importantly, that application we don't believe is going to be ready on Monday. That process, the ATO are still working on how that will be rolled out. So I would expect that that application, there's probably not much point trying to get that in on Monday. It might be one better off left till later in the week. But again, talk to the accountant, figure out where you sit. They should be able to handle things for you.
Okay. We are a tourist business operating for 20 years, no BAS, no GST, turnover lower than threshold, no employees, just my husband and myself. Feel that we're not eligible for JobKeeper or Job Seeker. What are we eligible for?
Look, the good news is, assuming that there is a decline in turnover, they are eligible for the JobKeeper payment. So and again, it's referring back to that earlier question, this is more about the eligible business participant. So where you've got a partnership running a business, one of the partners can apply, not the other. So you can have one partner nominated as an eligible business participant, and you can get the JobKeeper payment for that partner in the partnership. Still got to meet the turnover test and so forth, but no, definitely there is at least the $1,500 payment will be available for them.
Okay, excellent. Are employers able to make staff take annual leave to the value of the JobKeeper amount? Therefore, employer claiming and keeping JobKeeper and paying staff equivalent amount from annual leave?
It's against the spirit, I'd say, of what the JobKeeper payment is about. No, you actually cannot force an employee to take annual leave. You can request an employee to take annual leave under the Fair Work changes that went through as part of the JobKeeper package. But the employee is under no obligation to take their annual leave. So it's, look, again, that's one, speak to the accountants and speak to your advisors specifically on that issue. I'll be honest, it's not what the JobKeeper stimulus measure was about. There is a potential to encourage people to take annual leave, but the employees are not required to take leave.
Yep. I'm in the process of taking ownership of an existing business. Am I able to receive JobKeeper as a sole trader?
I would say no, because one of the requirements is that the business must have been registered and active from the 1st of March.
Okay. One final one. Sorry.
Yeah,
if a staff is on JobKeeper and they're currently not working, can they be called back into work? I assume yes.
Yes. Yep. Absolutely.
Good. That sounds fair. All right, guys. I haven't asked every question there, but I feel I've asked all the key themes. If there's anything that people really feel at the end of this they haven't had answered, please contact us via email and we can look to potentially put those answers in the follow-up as well. So now we'll just jump into the state stimulus package. Back over to you, Stephen and Tanya.
Yep. Okay, so the first one we're looking at there is payroll tax. There is just let me scroll through all these papers. So the plan from New South Wales government is there is an increase in the payroll tax threshold from $900,000 to $10 million for the rest of this financial year. Now, part of the process there is effectively designed to give employers a 25% discount effectively on their payroll tax as part of the annual reconciliation process. There isn't a requirement for employers in that bracket. There's actually not a requirement to report the monthly wages as there normally would be. There's no requirement to report, there's no requirement to pay, but you still have to include those wages in your annual reconciliation, and a discount of 25% will be passed on during that process. That annual reconciliation still needs to be done and lodged by the 28th of July. So it is a 25% discount, only available for those employers with wages for payroll tax purposes of less than 10 million. And there is also the option as well of having the option of deferring those payments as well for a potential period of up to 6 months. The Office of State Revenue New South Wales is also in the process. They will increase the payroll tax threshold to $1 million from 1 July 2020. That's been I guess a planned move for some time, but certainly that is something that, again, that will help out a little bit for the employees, for the employers that are still there. Kicking along, there will be a concession of an extra $100,000 on that threshold from 1st of July.
Right, okay, let's have a look at the $10,000 business grant. Now, this is from the New South Wales government, and it has been put out there to offer financial support on small businesses that have been greatly impacted from COVID-19. Now, to be eligible for this grant, you must be based in New South Wales, must be a small business, be registered with an ABN as at the 1st of March, and have an annual turnover of more than 75,000. Now, most people with that will produce a business activity statement. So you've got to have the evidence to support this to allow you to access these funds. You also must employ between 1 and 19 full-time workers as at the 1st of March. And you must have been highly impacted by the public health order that was effective from the 31st of March. Now, the big important part of this one is that you have to show that you've had at least a 75% decline in turnover compared to the same 2-week period in 2019 as a result of this COVID-19 and the order that's been put in. So the main reason for this $10,000 is help to cover those unavoidable business expenses that have come about due to the order that's been put in place. So it's to try to help with utilities, rates, insurance, all those costs that the fixed costs that will be there regardless of whether you can continue to trade as you normally would. So it's really a $10,000 grant being put out there by the state government to try to help those businesses that a lot of them that have been forced to close immediately, and a lot of these costs are unavoidable. So the $10,000 is out there to help cover those costs. Okay, the other thing, the next one there is in regards to other fees and charges. Now, there have been some fee waivers put out just in regards to, well, I know there are some people from some clubs that may be online here. So there has been deferral of gaming machine tax payments that is in place from March through to September. So that's been put in place there. There's also a lot of other packages available with license and permit fees where they're looking at waiving fees for a 12-month period for some of those. I won't go into too much detail on those ones there.
Yeah. In relation to the last point of that slide, the land tax relief package, this is another one of those packages that has still got more to be released as far as how this will work in its complete form. But at this stage, there's a 25% reduction in land tax available to landlords that have properties used for business or residential purposes. If your tenant is a commercial tenant, you're eligible if there is a 30% drop in revenue due to the COVID pandemic. And for residential tenants, a 25% drop in household income. Now, the obligation will be on the tenants to confirm and provide that information to the landlord. It is unclear in what respect that can be provided, whether it's got to be financial data or whether it has to be just a statutory declaration. That sort of information will need to be updated. And I'd encourage anyone in this position to at least keep their eyes on this measure as things roll out further. Now, the 25% concession needs to be, in part, passed on to the tenants. So it's not a concession just available for the landlords. And it ties into the National Cabinet, which released a mandatory code of conduct in relation to leasing principles during the COVID outbreak. And as part of that process, and we'll touch on this as well, but as a tenant, there is an eligibility there, and every tenant that's suffering as a result of the lockdown measures and so forth, and the social distancing lockdown measures, they're eligible to apply to their landlords for a reduction or a concession in rent in proportion to their revenue decline. So in respect of a franchise, it will be assessed at the franchise level, but in the respect of retail corporate groups, it's actually accepted at the group level as to what that turnover decline needs to be. Now, the code is actually in place now, and it requires tenants and landlords to work together in good faith to pass on concessions to the tenants. At least 50% of the reductions need to be passed in respect of rent concessions in relation to rent payable in the form of either a waiver or a deferral. And in the event that the rent is deferred rather than waived, the repayment time for that deferral is up to 2 years. But again, there is a requirement here that landlords and tenants need to act in good faith and work together. And certainly from our experience to date, landlords have been quite accommodating and been quite transparent and open and flexible in relation to providing these sorts of assistance to their tenants. So I am conscious of time, Michael, but that's just a quick run through of the state stimulus measures. There's a few there. Is there any specific questions on those?
Yeah, and sorry, I just will start with one from the previous slide. This person's asked twice, so they're determined. 20K stimulus grant, requirement is 75,000 turnover for last financial year. What if you got only to 72K? Is there any wiggle room to apply for this grant?
Again, the turnover, a lot of the turnover tests have not been determined. You would need to probably provide some sort of evidence as to why you didn't meet the turnover requirement. Now, it may be that as a new business or whether you were heavily impacted by the bushfires, there is the potential to, I guess, expand that process, but it is going to be a manual process applying through Revenue New South or Service New South Wales. At this stage, we haven't seen confirmation or parameters around how that is actually going to work.
Okay. This is regard to the 10K stimulus. Are sole traders with no other employees eligible for the 10K state stimulus grant? Service New South Wales said yes when I contacted them, but accountants are advising not eligible.
The 10K business grant, there is a requirement as part of that you have a payroll. And at this stage, we understand that if you are not reporting employee information, you would not be eligible. So a sole trader employed through for instance, a partnership or a trust that doesn't have employees, our fear is that this grant may not be available for them.
Okay. Same stimulus package. Do refunds to customers due to being unable to provide tours count as an eligible expense for the grant, even if some have been paid in April?
Oh, good question. My initial thought is no. The reason being the refund it's effectively a refund of a deposit. It's not actually an expenditure. It's the $10,000 grant is designed more about unavoidable business costs, whereas the refund of a customer's deposit, I don't believe would be classified as a business cost. Yeah. That's something for the fine print, and I'd encourage that person to contact your accountant specifically, but my fear is no.
Okay. One final one on the 10K grants. Is the $10,000 business grant a sliding scale, or does an eligible business get the full $10,000 outright?
Yeah. No, it's not a sliding scale. Our understanding is it's actually going to be a process where you might be eligible for a maximum of 10,000, but the payment will be effectively a reimbursement of expenditure. So we're expecting that certainly invoices and the like will need to be provided as part of this process. and a refund will be granted on those invoices rather than just being a payment direct to the customer, the clients of $10,000. It's similar to a lot of prime producers will be familiar with the rural assistance, with the disaster relief payments. It's submit your invoices and then they'll pass on the refund of those up to a maximum of $10,000.
Okay. We've got one now for the rent relief. Is the landlord required to give a combination of a waiver and a deferral, or is it up to the landlord?
It is up to the landlord. It is requirement. The reductions in rent payable is in the form of waivers and deferrals. The waivers must constitute no less than 50% of the reduction in rent payable. So if you're going to give a concession, at least 50% of any concession has to be in relation to rent waivers. The other 50% can be in deferrals, but there is a certain amount that needs to be in respect of rent waivers.
Okay. We have just about to click on the hour mark, so hopefully people can stick around and we'll whiz through these last two slides in hopefully the next 10 minutes.
Yep.
All right, the next one there is just about identifying the fixed costs and future planning. So I think with businesses that have been impacted on this, the most important thing that they can be doing at the moment is constantly monitoring their cash flow, constantly having a look at those costs that they can look at reducing, and just making sure they have got the ability to pay for any of those fixed costs that are unavoidable at this point in time, and then access any stimulus packages to assist with that. So just in regards to that, make sure that you are reviewing your profit and loss and determining what your fixed costs are. Review any repayments, so have a look at any repayments you may have to make during this period of time, and whether it's possible to contact your financier and see if those repayments can be delayed. I know some people are looking at doing that from a cash flow point of view and delaying those payments. Having a look at a break-even point, I think that's where it comes down to businesses just making sure they're on top of their cash flow and making sure that they are aware of what costs are there and what revenue they need to cover those, or what reserves they've got there to cover it. Just being able to track that constantly is what's going to help whether a business can keep going forward, or whether basically, they can't do anything at this point in time. So just being aware of the business and working on the business and making sure you know your costs, you know your income, and you know what packages are available out there to access.
Okay. No, I've got a couple of questions that have come through for the last slide still. This one's an interesting one. I think I've had a chat to this person. With regards to the refunds not being counted as sales, what about when third parties such as Website Travel, which is a big third-party seller of many of these people's products, what about how Website Travel operators money and have gone into administration? Can we claim 10K for arrears there?
Look, that's one that I'll be honest, I can't answer that one just off the cuff. There's a few things to look at there, including the arrangements between the third-party providers. There's a few things to look at there. I couldn't answer that just straight off the bat.
No problem.
That's a little bit more detailed. I'd encourage people to get in touch with their accountants in those situations and just work through that process. It's not a straightforward, simple answer, that's for sure.
Okay. And just another one on the 10K. Can we claim 10,000 for rent arrears if we work from home?
I would argue, well, it depends on how you work from home, I guess. Again, if the rent is more residential rent, I would say no, because this is purely for dedicated business expenses. So if only a small proportion of your rent is in relation to the business, it'd only be that proportion that you could actually claim the $10,000 grant for.
Okay. And just one final one on JobKeeper. I've had a couple like this question. My husband and I run a caravan park, which has become very slow due to the coronavirus. I was wondering if both of us are eligible for the JobKeeper payment.
Look, it's a good question. If it's run through a partnership, the simple answer is no, only one person would be eligible. If it's run through a company and both individuals are actually on the payroll as an employee and actively engaged in the business, there is the potential to get the JobKeeper payment for both of those, but only if they're paid through the payroll as an employee. If you're not paid through the payroll, then you come under the business participant guidelines, and you're only allowed one business participant per entity. So only one of them in that case would be eligible if it was something like a partnership, company or trust where they're not listed on the payroll as an employee.
Okay, excellent. All right, we'll jump to the final slide now. Oops.
Okay. So look, the main thing here is, look, communicate with people. I mean, that's the best thing that you can do with people here. Look, contact the ATO. Try as best you can, get the lodgements in, because the lodgements dictate what you are ultimately eligible for. So get the lodgements in. You can always negotiate the payment of tax debts. As far as the ATO is concerned, they are very flexible. For a creditor, they're probably one of the best ones to owe money to. They're actually incredibly flexible. So don't be afraid of the ATO. Talk to them, be in touch with them, but most importantly, keep your lodgements up to date. Contacting your bank, look, all the banks, certainly the major banks that we've been dealing with, they've all been very flexible. They're either limiting repayments to just interest only, or they're deferring payments altogether, in some cases allowing interest to be capitalised as part of the borrowings. The banks have been great, so be in touch with the bank if you've got loan commitments. Even in respect of hire purchases and chattel mortgages and leases, many of the financial institutions are quite happy to give a 3-month payment-free period and just tack it on to the end of the lease. So there's a lot of options available for people in this period of time just to defer some of those fixed costs. Talk to your landlord. Landlords are interested in making sure that their tenant is around in 6-12 months' time, 2 years' time. It's in their best interest to try and help businesses get through this. So don't be afraid to talk to your landlord. Have a chat with them. Most that we've seen are actually being quite reasonable. Looking at ways to change your business model. I know locally here, a lot of businesses are moving towards deliveries and takeaways, online sales. A lot of the larger retail outlets, their online sales are just going absolutely crazy and they cannot keep up. So there's a lot of opportunities. I know personally, Zoom and Skype meetings, obviously today, but technology is amazing as to what we can do. So look at all those things, embrace technology as much as you can. Contact your indirect suppliers. A lot of the phone and electricity companies have been quite flexible about deferring payments. Don't be afraid to ask for help if you can, especially if you meet a lot of these requirements in relation to JobKeeper and so forth. As soon as a lot of the providers find out you're eligible for that, the door's open and they're happy to be accommodating. So contact all your direct suppliers, look at extended payment terms, keep the communication flowing with your employees. Remember, with JobKeeper, it's got to be offered to all employees. And probably the only other thing I'd add to the bottom of that is get in touch with your accountants, get in touch with your business advisors, have the chat, they're happy to talk. There's a lot of stuff we're going through. We may not literally have answers to every situation immediately because a lot of the fine print is not released as yet. We're hoping that that'll come out very quickly. But at this stage, we are certainly moving in a field where the goalposts keep moving. So look, keep in touch with them, drop them an email, drop them a message, drop them a text, just keep in touch. And hopefully we'll all get through this and we'll all be in business out the other side and things will be looking a lot rosier in a few months' time.
Excellent. Thanks for that, Stephen. Just a couple questions to wrap up. I work under an ABN and put down my income as part of a trust return. I pay my assessed PAYG amount every quarter, which includes a trust distribution. Do I have to be GST registered to claim the JobKeeper payment under my ABN?
Yeah, so with this one, I think this is maybe a similar one we spoke about before.
Yep. Sorry.
The trust itself is eligible, I would expect, eligible for the JobKeeper. The individual in this case will only be eligible as a business participant. I'm thinking the pay-as-you-go that's being communicated here in this question is more about pay-as-you-go instalments, an income tax instalment, rather than pay-as-you-go withholding. If it's income tax instalment, I guess we've put the individual to one side. We only look at the trust, and the trust is the business entity. That's the entity that would need to be registered for JobKeeper, and we can then nominate that business participant if need be.
Okay. Just a couple more on JobKeeper. When we submit BAS PAYG payroll, do we simply change the super guarantee payment from 9.5% to 0 for the JobKeeper payment?
In its simplest form, yes. So there is no requirement. There's no requirement on employers to pay superannuation on the JobKeeper top-up payment. So whether that top-up is only $200, for instance, or whether it's the full $1,500, whatever that top-up is, employers do not have to pay superannuation on that top-up amount. You do have to pay super on the ordinary hours that the employees physically work, but not the top-up payment.
Okay. And one final question. If there is a company with one director paid as an employee and several employees, is the director also eligible for JobKeeper?
As an employee, yes.
Yeah, simple. All right, great. Excellent. Thanks very much for that. First of all, I'd like to thank everybody for taking the time again to spend with us today. We appreciate the complexity of this. We've got two experts here, and I think they've demonstrated this is not how much they know, how much they've been able to convey, but how this is not a simple process, and you really need to communicate with the people who you engage with your business and make sure you do check all these avenues that we have. I'd like to extend a special thank you to Stephen and Tanya for coming here today, sharing their time and their expertise. It's been greatly appreciated. As a follow-up, we will share the slides and a link to the recording of the webinar with everybody who's registered for this event. Moving forward, we want to ensure that we are delivering value to our stakeholders in assisting you in navigate these challenges that we're having at the moment. So, excuse me. So we'll include a very short survey with the follow-up as well, just asking the audience what other areas they are looking for expert or more advice on, and we may look to run other webinars on such subjects. So thank you again for your time. Thank you again, Tanya and Stephen, for your invaluable advice, and really appreciate everyone being here today. Cheers. Thanks, guys.
Thanks.